You must have heard that Presco Plc is offering new shares at a discounted price in its rights issue. But before you rush to buy these new shares just because it's at a lower price, or even before you exercise any rights issue, there are key things you need to check to determine whether a rights issue is a good offer for you or not. And in this video, I'll walk you through some of the key things you can assess to help you make a decision whether a rights issue is good for you or not. First off, what is a rights issue? A rights issue is when a company issues new shares to its existing shareholders, only existing shareholders, but at a lower price than what the shares are being sold in the market. So in the case of Presco, as at the time the rights issue circular was made public, the share price of the company was trading at about 1,480 naira. However, in the rights issue circular, these new shares are going to be offered to existing shareholders at a price of 1,420 naira per share. So this means that existing shareholders can buy new shares at a price lower than what it was in the market. So if you're an existing shareholder in Presco, or even any company that is offering rights issue, you have an advantage because you can get these shares at a lower price. And in Presco's situation, they are offering 1 share for every 6 shares a shareholder owns. So if you're a shareholder who has 6,000 shares in Presco, you have a right, not an obligation, to buy extra 1,000 shares from the company at a price of 1,420 naira. And buying these shares would cost you 1,420,000 naira. Meanwhile, if you had wanted to buy these 1,000 new shares from the market, you would have been spending 1,480,000 naira. So you see, it seems like there is a financial benefit for you to take advantage of this rights issue, right? But before you rush to use your money to buy more shares, there are some key things you need to check to determine if this rights issue is good for you or not. First thing you need to do is to ask yourself, why does this company need money? Because if they are doing a rights issue, it means that they are raising more capital from you, the current shareholders. So why does this company need money? Do they need more money for expansion, for investment projects, for paying down debts, or is the company cash strapped? In the case of Presco, the money raised from this rights issue will be put into greenfield and brownfield acquisitions and other investments for expansion. So you need to know why the company needs more money as a shareholder, so that it can give you an idea whether you should keep investing in this company or not. The second thing you need to check is the company's current performance. You need to check things like the revenue, profit trends, debt levels, cash flow, and then compare it with the previous period. If the company is improving, or if its performance is improving, it means that the funds from this rights issue can help the company grow better. In the case of Presco, the company's interim report as of September 2025 shows that the revenue and even the net profit of the company has increased by over 113% compared to the same period last year, and the profit margin has remained at 40%, which was what it was same period last year. So what this means is that even though the company has succeeded in increasing its revenue over time, it has also succeeded in maintaining its cost levels to be at the same level as it was last year. This is a sign of efficiency. So it's important to look at these indicators to see if the company is actually making progress, and then that will help you decide whether it's still a good idea to keep investing in this company or not. The third and important thing you need to check to determine if a rights issue is good or not is the shares dilution. So in rights issue, because the company is issuing new shares at a lower price, the value of your existing shares will definitely be diluted. That is, the value will reduce. So in order to check whether this rights issue is going to be worth it in the long run, you need to determine how much these shares will be diluted, and you do this by using what we call the theoretical ex-rights price. So a theoretical ex-right price is an estimate of what the value of your shares will be after the rights issue, and in the case of Presco, we'll work it out here. Presco is issuing 1 new share for every 6 shares you own. So that means that if you had 6,000 shares in Presco, you have a right to buy 1,000 more shares at a price of 1,420 naira. First of all, let's determine what the value of your old shares were. Before the rights issue circular was made public on November 6, 2025, the share price of Presco was trading at about 1,480 naira. So that means that if you had 6,000 shares in Presco, it would have been worth 8,880,000 naira. Now, let's talk about the new shares. If you exercise your rights and buy 1,000 new shares at the price of 1,420 naira, it means that the value of your new shares would have been 1,420,000 naira. So in total, the old and the new shares are both worth 10,300,000 naira. That is, if we add the 8,800,000 naira and the 1,420,000 naira, we'll be getting 10,300,000 naira. So the value of your investment at Presco is worth 10,300,000 naira. However, you have 7,000 shares now. But on a per share basis, the value of each of your shares would be 1,471 naira. So in theory, because of these new discounted shares that are being offered, the value of your old shares, that is the value of the 6,000 shares, has declined to 1,471 naira per share. So you can compare this decline in the old share price with the discount you are getting from the new shares that are being issued at 1,420 naira, and then confidently make a decision whether to subscribe or not subscribe to these new shares at a lower price of 1,420 naira per share. Finally, as an investor, you need to always evaluate the reason why the company you are invested in needs more money. A lot of people believe that companies that do rights issue are companies that are cash strapped or companies that need to pay down debts quickly, but that's not the case. Because, for example, in the case of Presco here, we can see that the money from this rights issue, that's about 237 billion naira, will be channeled towards greenfield and brownfield acquisitions and other investments, which will potentially lead to more profits in the future. So before investing or exercising your rights in any company, it's always important to know why they need this money and if it's still a good idea for you to keep investing in that company or not. Rights issues are not automatically good or bad. The key is for you as an investor to understand the offer and know if this matches your investment goal or not. Now, if you have a Presco share, let me know in the comments, will you be exercising your rights, and have you already exercised your rights? Don't forget to share this video to anyone who will find it helpful. Like and share. Follow for more finance made simple, and I'll see you in my next video.